about is the what is going on there. And this is what the agreement says, right? The agreement is signed between ESSO Guyana, CNOC Guyana, and um, HES Guyana. But they are totally different from the parent company. This is what the parent company is. Um, Exxon headquarters is in Houston, Texas. Did we sign a contract with Houston, Texas? No. We signed a contract with ESSO Guyana, which is registered in the Bahamas. We also have, um, I'll take this down. We also have the headquarters of CNOC. Where is CNOC headquarters? CNOC headquarters is in Hong Kong. Do we have a contract with Hong Kong? No. We have a contract with CNOC Guyana that is registered in Barbados. And then we have HES. Where is HES headquarters? HES headquarters is in um, Honolulu. Do we have a contract with HES in Honolulu? No. We have a HES Guyana Limited registered in the Cayman Island. And that is what we have. And when we speak of parent company talking to each other, that what they're talking about has not recorded in the books of the subsidiary. What this gentleman was saying is that if you want to know what's going on, let's look at the financial statement. And I'm saying not necessarily so, because what the parent company discussed or agreed to, or any payment made among themselves, that is not reflected in the subsidiary books. That has nothing to do with the branch account. That is the parent company transaction. And I'm saying that if Hess and CNOC paid any money, any cash to Exxon for giving up for 55% of the production, revenue, profits of the Stabroek block, we need to share that cost, that income. That is all I'm saying. That should be we should work together to see if that happened. So when the gentleman is saying that, oh, if you want to know that, go into the books in Guyana, that is not true, sir. The branch account do not reflect any parent company discussion or payment among themselves. That is the parent company books. We got to go there to look. So how do we go there? The government of Guyana can ask, because these companies' financials are so complex. It's sometimes you need forensic accountants to go and look and see, to unravel some of the things that they have in their books. It takes time, it takes money. It's not you can go just look and pick up and it's okay. So it's really that kind of arrangement we are working with. And I'm asking Guyanese, please let us work together for the common good. So the gentleman suggested we look at the income statement or the financial statement of the local bodies that operating oil and gas sector. And I agree. So I went to the books of those accounts, and I went to, of course, we go to ESSO, which is the main arm of the three companies. They own 45%. So in 2022, this is ESSO profit and loss account, income statement. It doesn't really matter. It's all semantic. Depends on this is how it's laid out in the international standard, IFRS. The FASB, US GAAP have a different format, but it's basically the same thing basically. But what is important is this is the Guyana branch. That is what is important. This is not Houston, Texas. This is ESSO Guyana operation. And this is the audited financial statement. So what the auditors reported to us is that the revenue for ESSO in 2022 was 876 billion, compared to 21 was 254 billion. And then they have the expenses. Exploration, that's ESSO share, production costs, ESSO share. And don't forget, ESSO share 45% of it. And of course, depreciation and so on. We'll get into that later on. But what is also important is to look at the balance sheet. And the balance sheet of ESSO Guyana is showing 1.8 billion in plant, property, and equipment, which represent 45% again of the total plant, property, and equipment. So 100% grossed up will tell us what the total asset is. And then we have other things. We have things like what is related party receivables. Note 14 in the accounts give us some information. But again, they're very scanty information. We don't know the details. 325 billion. Then we have default receivables. What is that? Note 12 gave some, 60 billion. So this is the balance sheet that they would have presented. What is also important in this discussion is the statement of cash flow. And this is what the statement of cash flow does for non-accounting personnel is that it reconciles the net income with the cash in the balance sheet. So there's two numbers we already know. We know what the net income is in our profit and loss statement or the income statement, and we know what the cash balance is in our balance sheet. So this statement of cash flow is really reconciling the two, and that's all it is. So any non-cash transaction as an expense in the income statement is added back to get what the real profit is, that is non-cash basis. So in this case, depreciation, lease interest, and long-term obligation is all added back because they were non-cash transaction. Now, this is important to know because do we include these in cost oil to determine profit? That's a discussion we should have. We are not having that discussion. And I'm saying that we need to because it's the accounting. You see, it's one thing with having accounting profits, another thing to have income tax profits. Now we know they don't pay income tax because this, again, that's another thing that we give away is the taxes on their profit. So even though in this financial statement here, they have a tax expense of 59 billion, we know that that is not going to be paid. The government of Guyana will have to write a check to GRA for 59 billion on behalf of the profit from, this is only for ESSO. Gross this up and you'll see what I'm talking about. And that's the discussion I think we should have. And we seem to be demonizing each other rather than having that discussion. But I did some analysis and I want to share it with you. And I want to leave this here because this is important in the discussion. Is that this is our a synopsis of the financial statement that we just we have here in ESSO. So in 2022, ESSO reported revenue of 876 billion Guyana dollars. If we gross that up, because that's only 45% of revenue, it will be 1.9 trillion, right? Cost oil, according to ESSO, is 239 billion. Gross that up, it will be 532 billion. But look what depreciation. Depreciation, they deducted depreciation, which is a non-cash, expense of 132 billion. Gross it up, that's $295 billion. So if we were to take away depreciation from cost oil, really operating cost is 106 billion to ESSO, and overall it's about 238 billion Guyana dollars. Now this is important in our discussion. Should we include this 294 billion as part of cost oil, when in fact it's our asset that we're paying for, and after the oil has been gone, those assets are transferred to us. So they're deducting that as an expense in the profit and loss statement, and then coming up with profit oil. And I'm saying we should not. We should add it back. So if we add it back, then the operating expense really is 238 billion. But revenue was 1.9 trillion. So that cost oil represents 12% of revenue. But the agreement says that 75% is recoverable. 75% of 1.9 trillion is 1.46 trillion. So if we take away 237, which is the operating expense, then what went to recoverable cost for Exploration cost is 1.2 trillion. So my question again that we need to ask fellow Guyanese, what is the cost of the exploration? How much was exploration cost? For 2022 alone, we have repaid 1.2 trillion towards that. Shouldn't we ask questions, gentlemen and ladies? This is some discussion we should have and work together to see what the hell is these people doing to us? And they're really, really raping us. Let's look at royalty. Royalty, according to the agreement, we should have 2% royalty, right? Is that correct? We agree. 2% of 1.9 trillion is $38.9 billion. What did the Bank of Guyana report? Let's look at Bank of Guyana report. Bank of Guyana in 2022, this is Bank of Guyana report. It says that for royalty, we receive $32.3 billion. That is what the Bank of Guyana report. 32.3 billion. Royalty based on this formula at 1.9 trillion revenue should be 38.9 billion. Bank of Guyana said we got 32.3 billion. What happened to the 6.9 billion? Is that a discussion we should have? So, fellow Guyanese, I really want to get into a different direction now, and I want to bring this part to an end because I'm saying that if Exxon received cash to give up 55% of the production agreement to CNOOC and to Hess, then we need to share that. The same thing we did with our gold production. We had a Canadian company. They had duty-free concession for everything. Then they sell it to the Chinese for 200 and odd million US. Guyana got zilch. These are the agreements I'm talking about. This is what our politicians have put it into. Now I'm not blaming this government. I know I got to go back and see who signed that agreement with the Canadian company. But this is what I'm talking about. These people are coming into our country, they're raping us, and we're allowing them to get out with as if nothing is wrong. Please, Guyanese, we need to change that. Until the next time, God bless our great country of Guyana.